Good evening, friends. Welcome to Central Banking Lectures. It's a special elective, okay? It's totally related to RBI. So let's start the topic without wasting the time. And today's topic is FEMA, okay? So FEMA, Foreign Exchange Management Act 1999, came into force by the Act of Parliament. So FEMA came into existence in 1999. The important part about FEMA is, before FEMA, we had FERA, F-E-R-A, Foreign Exchange Regulation Act. Okay, FERA. So what is the difference between FERA and FEMA? In FERA, if you made some mistake, you were jailed. If you made some error, some mistake, you were actually jailed. But in FEMA, they have changed it. You are not jailed unless it's very serious crime. So if it's a financial loss or some mistake, error you have done, then you have to pay the fine and you are out. Okay, so just it's related to money over here. So they've made it simple over here. But in FERA earlier, it was in 1977 to 1999. Means FERA came in roughly in 1970s. Foreign Exchange Regulation Act. Shall I write this? Okay, one sec. Many of you are saying write this. Foreign Exchange Regulation. This was regulation. Okay, now regulation has been removed. Regulation Act. Okay, now this regulation has been removed. Now it's management. Okay, it was enacted. This FEMA was enacted on 29 December 1999. The new act is in consonance with the frameworks of WTO. So World Trade Organization has given the guidelines for all the forex related matters, and this is in consonance means it is in agreement with that. India had signed the GATT. Earlier WTO was called as GATT. Okay, GATT. Anyone knows what is the full form of GATT? Anyone? Full form of GATT. Okay, General Agreement on Trade and Tariff. Right? General Agreement. Remember or forgot? You in your banking exam, when you gave the banking exam entrance, at that time you had studied all this agreement, okay, on trade and tariff, right? On trade and tariff. So India had signed this GATT in 90s, roughly in 94, 95 we had signed it, okay. It also paved the way for Prevention of Money Laundering Act, PMLA, which came into effect on July 1, 2005. So because of this GATT or because of this FEMA, FEMA basically, PMLA was brought in, okay, in 2002. What is FEMA then? It is a set of regulations that empowers the Reserve Bank of India to pass regulations and enables the Government of India to pass rules relating to foreign exchange in tune with the foreign trade policy of India. So it empowers the Reserve Bank of India to pass regulations. It gives the powers to RBI to pass the regulations and enables the Government of India to pass. So it gives powers to both Government of India and Reserve Bank, okay, to pass rules relating to foreign exchange in tune with the foreign trade policies. This is important. So whatever regulations are passed under FEMA, they should be in line with the foreign trade policy. Okay, this foreign trade policy means what? This foreign trade policy is given by the country. There are three main policies in any country. What are those? One is fiscal policy, fiscal, right? Fiscal. Second is monetary policy, monetary. Okay. Third is EXIM policy, export import. Okay, export import. These are the three main policies. Export, EXIM, okay. So this foreign trade policy will cover all these. Basically, EXIM policy will be the main part of the foreign trade policy. So foreign trade policy means what are my rules and regulations. This is generally framed by, means helped by PEDI. Okay. Main features of it gives powers to the government to flow of payments to and from persons situated outside country. So for payments to and from. So transfer of money outside also. If this is my country, okay, this is my country. The transfer of the funds outside also, or funds come to India also. Okay, coming to India means what? Under what term can money come to India? And under NRIs, those NRIs working abroad get money. It can come under FDI, foreign direct investment. It can come under FDI, foreign portfolio investment, right? And how can it go out? So it can go out via remittances. So that's why they brought in LR related what LR scheme up to USD 2,50,000, right? liberalized remittance scheme. So both the things are controlled under FEMA. FEMA has a control over income also, over outgoing also. Okay. All financial transactions concerning foreign securities or exchange cannot be carried out without approval of FEMA. So all foreign transactions should adhere to the FEMA directions. All transactions must be carried out through authorized person. What is this authorized person? There are three authorized persons. Okay, AD1, AD2, and AD3. Right? AD1, AD2, and AD3. Okay, these are three authorized persons. Generally, even are all the commercial banks. Commercial, I am not talking of cooperative banks. Commercial banks. Commercial banks means these are all the private banks and the nationalized banks. These are all commercial banks. AD2 is generally, I tell you generally, all those private exchanges like Thomas Cook. Okay, Thomas Cook and what? There are many as such. Isn't Thomas Cook one name? There can be many. Thomas Cook or there are what? There are others also, but still I remember this name only generally. Thomas Cook. And AD3 is what? AD3 is sometimes they are given the transactions, means for specific purpose. Specific purpose. These guys are always for specific purpose. They carry out the activities done by this AD2 generally. Okay, generally, generally by AD2. So, but it can do the activities of AD1 also, but this is for specific purpose. Once this purpose is over, AD3's license is taken off. Okay. Main features. It gives the interest to the public. The government of India can restrict any authorized individual from carrying out foreign exchange deals within the current account. So it gives in general interest of public. Government of India can restrict any authorized individual. Authorized individual is what? This 81, 82, 83. So RBI can take the license of any 81, 82, 83 anytime if it feels the company is not performing as per the guidelines of FEMA. Okay, or it is going against the general public benefit. It empowers RBI to place restrictions on transactions from capital account even if it is carried out by an authorized individual. So restrictions on capital account. Now what is this capital account and current account? See here, there are two transactions always. One is capital, second is current. Okay, write it over here. Capital. Capital means what? It means gives rise to assets. Okay, assets outside India many a times. Okay, suppose if I am passing the funds from India to outside India for buying the assets or opening a separate current account in some other foreign bank, so that is also considered as capital account, capital transaction. What is current transaction then? Current transaction means for my running cost. If I require the raw material and I am buying it from outside, importing it from outside, okay, so that is a current account transaction. Means this is for running of my business. And capital means what? I am making some fixed asset somewhere. That fixed asset can be in form of physical asset, land, property, or it can be in form of shares. Even if I buy shares of some foreign bank, that can also be considered under this only. Okay, so coming back, main features. As per this act, Indians residing in India have the permission to conduct foreign exchange, foreign security transactions, or right to hold or own immovable property in foreign country. So Indians can have the right. Suppose if I am the resident, I can hold the property outside. What's the harm? If I am having money, I can hold it. Only the thing is I have to follow the guidelines. I shouldn't go against the public behavior or against the public benefit. Okay, so I can have foreign security transactions. I can buy shares of foreign companies. See, RBI doesn't restrict you from doing anything. Never. It can't say that don't buy the shares. It says buy the shares, but within the guidelines. Okay. In case security, property, or currency was acquired or owned by the individual was based outside the country, or when they inherit the property from individuals staying outside the country. So any of these ways, I can have the property outside, or stocks outside of, or my bonds outside. Anything I can have. Suppose imagine there is a relative of mine who is staying in USA. Now the relative has a huge property, and that relative has given me the full property after his death. So what do I do? Shall I leave that property? No, I can't take it. Here, as per the guidelines, if you follow, you can do anything. Just don't change, don't go out of the guidelines. That's what FEMA says. Structure of FEMA. The head office of FEMA is also known as ED, Enforcement Directorate. Now you might be hearing this word ED, isn't it? So head office of FEMA, also known as ED, headed by directors, is located in New Delhi. There are 5 zonal offices in Delhi, Mumbai, Kolkata, Chennai, and Jalandhar. Each office is headed by a deputy director. Every 5 zones are further divided into sub-zones, headed by assistant directors, and 5 field units headed by chief enforcement officers. Now this is very important. Why? I think I'm taking this topic second time or third time. Why? Because this topic you definitely find it in the exam. Okay, because FEMA is one of the hot topics in banking today. So you have to look at this ED. You always hear this newspaper, right? ED this, ED that, raid that, ED. ED works under FEMA only. Its main book is FEMA. So headed by the director located in New Delhi. There are 5 zonal offices. Now what are the 5 zonal offices? It is Delhi, Mumbai, Kolkata, Chennai and Jalandhar. So 5 zonal offices are there. Now you'll say, sir, Delhi, Mumbai, Kolkata, Chennai, these are all Kolkata, Jalandhar. Jalandhar is not that big state, that big city, but why that? Because it's a border state. Punjab is a border state, so that's why it needs to be there. Okay, so that's why. Yeah. So all the border states are always covered under some special security. Okay, so each of these 5 zones are further divided into 7 sub-zonal offices. Means each of these zone, Delhi will be having 7 sub-zones, Mumbai will be having 7 sub-zones, and everything, all of them similar. Now the question in exam which comes is who heads whom? Okay, means sub-zonal officers will be headed by whom? Assistant directors. And 5 field units headed by chief enforcement officers. Okay. So the sub-zonal officers will be headed by assistant director, and 5 field units headed by chief enforcement officers. So these field units will be headed by whom? Chief enforcement officers. Okay, so let me write this because these are all exam questions. Okay, now who is the head of this complete ED, you can call it, or FEMA? Okay, it is headed by director. So head is director, main person is director. Okay, that is one of unity in command. Means you studied this in ABF, right? Unity in command means one person should be there in command. Then 5 zonal officers, zonal, they are headed by whom? Zonal, they are headed by deputy. Okay, deputy director. Then under the zonal officers we have sub-zonal officers. So sub-zonal are headed by whom? Sub-zonal, they are headed by assistant directors, right? Assistant directors. Okay, then these sub-zonal officers will always also have the 5 field units. So field units will be headed by whom? Field units. Okay, they will be headed by whom? Chief enforcement officer, CEO. Not, we won't call it CEO. CEO gives a separate name. Chief enforcement officers, right? So this is the sequence which you have to follow. Complete FEMA or ED will be headed by director. Zonal officers will be headed by deputy director. Sub-zonal officers will be headed by assistant director. Field units will be headed by chief enforcement officers. Now you listen every day. ED raided that guy, this leader, that leader, found 200 crores cash and all this. Who does this? This is done by these field units. They do the all jobs. Okay. So penalty for violation in FEMA Act. Under FEMA, adjudicator, an officer of ED with ED, can impose penalty 3 times the size of contravention involved in the sum is quantifiable. Means suppose if he comes to know that the fraud is for, let's say, 100 rupees, so he can give a penalty of 300 rupees. In case the contravention is not quantifiable, penalty is set as rupees 2 lakhs. So if not quantifiable, then 2 lakhs. Further, where violation is continuing one additional penalty of rupees 5,000 per day of the contravention can be imposed. Means if he is a regular offender, serial offender we call it, right? In serial offender, it is 5,000 per day of the contravention. Okay, so that was it about FEMA. Before going, I would suggest join the batches. Go to Adda 24/7. You will see the batches over here. Join them ASAP. Exams are near, so you have to study a lot, and portion is huge. Click on JIB and CIB. Click on CIB 23. You will see the details. See this. You can join the selection batch. You still have time. You can definitely study over here. Join the selection batch. In the selection batch, you go through the details. All the details are covered. Dates, timings, what are the study plans. You have recorded videos. So if you missed out any class, you can have the recorded videos. Look at the fees part also. Put on the discount offers here. Click on more offers over here. More offers. Okay. Put the code Y432. Y432. Click on apply. Look at this. 77% off you are getting. 23,999 reduces to 5,519. Such a huge discount. Join it immediately. Okay. You can join the video courses as well. You can join the revision batches as well. I'll be back tomorrow with